Happy Sunday, apprentices. Are you so reliant on your indicators that if someone were to take those away from you, you'd be lost, have no clue? That's what's next on today's show. Trading Forex or any other financial instrument carries substantial risk. The topics discussed on this show are the views of the host and the producers only. You should consult with your financial planner before investing in Forex or any other financial instrument. Don't be a dumbass.
Welcome to Day Trading Plumber, episode 37. I'm Matt Simpson, and I'm back in studio.
Hey, dude, you got to be like happier than pigs with lettuce with mud on them, because we're back on our studio equipment. Took us 2 hours to get it set up again because Matt got a new laptop and things weren't perfect. But yeah, if you guys are new to this show is about me, an ex-plumber, or I guess once a plumber, always a plumber, who has now become a full-time Forex trader. And I share my stories and what great stories they are sometimes. You know, drag Matt along here as my podcast producer because he has an ear for perfection and keeps me on track. We love new listeners. We're gaining more and more each week. If you guys are loving the show, nudge your neighbor, nudge fellow workers at work, get them on the show. All right. Indicators.
Hold on. We just came out of quarantine, and I'm really disappointed in you.
Why?
You had a solid opportunity to grow a quarantine skullet. And once again, you disappointed me. And you're less round than you were.
Well, I've been working out. I've lost 23 pounds, maybe 26, depending on if I weigh myself after I ate Burger King. Just kidding. But yeah, I'm feeling good. Obviously, last week we talked about the personal issues I will be going through for quite some time. But my wife and I are in a great place. It's not like we're fighting, and that definitely helps. But yeah, I think we had an amazing live event with our Journeyman channel subscribers on Facebook. It's a private channel. The people that are in that Journeyman trade signals on Telegram get an invite. I think last night was really good. We did some price action trading right there, on a replay on TradingView charts. And I think we got a good response, but it sparked my interest into doing this show where we're going to talk about my favorite indicators, but how as early traders or new traders or even experienced traders, we can tend to rely on these indicators way too much and kind of go down the rabbit hole of how that happens and why people just need something to confirm, right? That's why strategies are so popular. It's why people put out such crisp, well-written, tight, rule-based strategies using these indicators because they give them that medium, that thing to be like, when RSI hits 70, it's overbought. You must sell. And then you stack another indicator on with RSI. Okay, RSI is the trigger. That's your warning sign. Now divergence. Now you move to the pin bar or doji price action. You're selling it. And guys, these are all great strategies. These indicators do their job. I'm not going to be that person out there in space who I hear it over and over again. Indicators are lagging. They're behind. And yes, they are, but they have their place in your analysis. the way I mentor new traders, or the way I tell my friends if they get into trading, it's very important in the early stages of your trading path, you learn the basics first: price action, naked trading, support and resistance, trend lines, candlestick analysis. And guys, yes, a lot of people stay in that realm. And just like today's political arena, trading's no different. People get into their little corners and, you know, they create Facebook groups like price action only traders. If you dare go into that Facebook group and have an indicator on your chart, you get your head bit off.
Oh boy.
Why do you have RSI on there, dude? This is price action only. Just like anything, guys, keep an open mind. Stay humble. Stay fluid. You're going to find things just work out a lot better when you don't pick a side. You don't get so sold on the way you trade is perfect. I get it, guys. If you're making money and it's working for you, awesome. Stick with it. Refine it. Optimize it. Get it tighter. However, in that process, we tend to try to be too perfect. And then we end up getting all stressed out because now we have 19 indicators on our charts. They're all telling us different things. It's commonly known how people go through these phases. When you first start out trading, you're a sponge trying to soak up anything people are telling you that makes sense. Then things start to make sense. Then you have like 3 or 4 indicators on your charts. Then you get into that unicorn phase. You've learned enough. Nothing's really panning out. But the problem really can't be me as the trader. This guy who says this system has made him millions, it's not working for me. It must be he scammed me, or he's an idiot. So you go on to the next one. But you really liked parts of that strategy. They made sense. So you carry parts of that strategy onto a new strategy, and now you got RSI, ATR, MACD, and then you're drawing Fibonacci lines on top. You got to get a Fibonacci line retracement ratio to line up a long swing high to swing low with the swing low to a swing high. The 618s line up on a smaller time frame. Oh, it's a golden opportunity. We're going to take the trade. Guys, I'm going to tell you, indicators have their place. Disclaimer. This is my perception. And there are some hardcore indicator. The ATR is a new one that everyone is just getting on top of. And like, oh my God, this is a great indicator. The PAR. Don't ask me what it means. I'm going off just on a whim here. Well, it puts little dots. It's a trend trading indicator. It puts little dots. And when the red dot turns green, it's your indicator. Get in. And, there's some religious people, religious traders that swear by it. And, at the end of the day, guys, would you practice anything with that kind of focus, you're going to get better at it. And guys, these indicators, they have their place. They definitely give you an edge if used correctly. But we should never get so reliant on them that we lose sight of what the market's truly telling us. And one of the things I try to do to give myself perspective when I'm trading is I try to tell myself logically, without moving averages and all of these indicators, is logically this price based on the past price action cheap or expensive? Ask yourself that question. If this were if this were 2x4s, okay, in Home Depot, if you did just a little bit of research on what prices of 2x4s are going for historically, which is readily available, and you go in there and you've kind of done your homework, and the average price with all the vendors, the SAR, not the PAR.
The PSAR, Parabolic SAR.
Parabolic, yes, that's a very popular indicator. Are you going to read when the parabolic SAR dots move from red to green, that's your indication that the tide has shifted.
From Investopedia, which I'm a fan of.
Okay. Yeah, they do solid work.
The Parabolic SAR attempts to give traders an edge by highlighting the direction an asset is moving, as well as providing entry and exit points.
Yeah. Here's why that's so popular. It gives you everything you need as a trader. It tells you the entry, tells you the direction, gives you the exact time you need to enter. It solves all those problems we have when we're early in trading. Unfortunately, nothing's that easy. After filming an hour and a half of back testing today for my journeyman course that I have to redo because, after getting 75% of the way through it, some things came to light. We're all taught when you back test, you have a rule-based strategy and you have to eliminate the human factor out of it for it to be a controlled test. To truly have a controlled test on a strategy, it has to have money management rules. So this strategy, you need to have you risk 1% of your account and you need to get 1.5% return, right? Because a 1-to-1 ratio is just ludicrous. Because now you got to win more than 50% of the time to be profitable. A lot of these strategies and a lot of these gospels, these traders must do these things, come from the rules or the must needs to do when you backtest. Because truly, go ahead and open your White Claw. You're going to be a big fan. Because, 100 calories, 2 grams of carbs. It's like drinking water with a little hint of malt liquor in it.
Why not just drink water?
Because water just makes you pee with no fun.
Oh, it does have alcohol.
This makes you pee with only 2 grams of carbs. And
that is malt liquor, isn't it?
Yeah. We're drinking. What you got in my 40, dog? But yeah, nothing's that easy. And when you're back testing, okay, to run a control, you can't trade like I trade with no stop because you have to know what you're risking. And the only way you know what you're risking is you know where you're going to cut it off. So when I was doing that back testing exercise, because I'm teaching in my journeyman course how people can backtest using the tool you and I worked on today and how to log those and truly before they start any strategy, no matter how much they trust the person teaching them, going through at least 100 trades on historical charts and logging it and seeing price action happen right as they need to enter. They just got 100 trades under their belt with zero risk. Practice. Just like I've used this quite a bit lately. If Barry Bonds taught you how to swing a bat, okay. But are you going to be able to hit like him? No, not until you swing that bat. You get that muscle memory. You execute it thousands of times.
Grow your head a bit. And
you might get close to Barry Bonds' batting capabilities. But it's no different in trading. So when you guys are looking and learning a strategy, like the Parabolic SAR,
The what?
the PSAR,
The parabolic?
Parabolic, you watch a YouTube video, it gives you everything you need. Like, hey, I just put this thing on my chart, and as soon as the dot flips to the other side of the price, it's go time. It's just like the moving average crossover. One of the more commonly used, equities traders use it still. It's no secret moving averages are indicators that people use to confirm the trend. I don't know why. You just use your eyeballs. Price is going up. It's an uptrend. I don't know why you need a moving average to say, well, price is above the moving average is still considered an uptrend. You know, a very popular strategy. I even teach it in the apprentice course. Plug, right? I'm getting a lot of plugs in tonight. A simple strategy using, a 20-period moving average and a 200-period moving average. And when the 20 crosses the 200, ding, 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 you buy or sell it. However, when it crosses, price is already crossed quite some time ago. There's some price action analysis that's needed to sharpen that entry. And you only get that by watching charts and watching price action and doing these back testing procedures. Practice it 100 times. Know the probabilities. Start optimizing you as the trader. Now I'm fucking up the control because I'm adding a human factor. But guys, the whole goal here is to get you, the trader, you, the decision maker, unless you're running a robot, ready and to make these the stressful moment when you hit that button. And so many people are looking for these indicators or these strategies that use rule-based indicator, but these strategies that are like, because the only way to really, teach a strategy is to have these indicators and be like, okay, when the Bollinger Band with these settings, I know because I'm teaching them right now. The good part is I teach it, then we do it 100 times, and then we look at the probabilities, the outcome of that sample size. Because guys, you could pick a sample in the 60s, and it could be completely different. A chart sample talking about, or if you were to sample March and April during COVID-19, there's no other time in historical or since we've been recording Forex charts that we've been in a pandemic of this size. The outcomes could be different than other sample sizes. That's what lots of people forget when they learn a strategy and it works for them 60 times out of 100. They think they struck gold, and 60% win rate is pretty damn good, especially if you've tested that and it's a 1 to 1.5 win ratio. You're making good money. However, people get in their silos and they're like, this is the perfect strategy. And then a COVID-19 comes, or Trump just becoming president comes, and shit goes sideways, and they give up on that strategy. They start revenge trading, doubling their position size because I got to get that run where I get 5 wins in a row, and I'll be right back in the game.
You mentioned that election. We're still doing election night trading, right?
Yeah. Yeah, even if we have mail-in ballots and it's going to be a throw in the towel.
Barry Bonds was a pretty important athlete for baseball and a pretty big dude. Giant hands, giant head.
Obviously on steroids.
Give us your
controversial.
Give us your height and weight.
I am 6'2", 242 now. I was 268 in January.
I didn't ask what you were.
242.
All right. Do you consider yourself pretty strong,
Yeah,
considering your dimensions?
I would say I'm hitting R2.
Okay.
I'm hitting R2 above the pivot,
All right.
the mean. And I hit 41 tomorrow, so I'm coming back to the pivot.
What is a deadlift? What is that technique?
Deadlift is weight is on the floor or on blocks if you're a cheater. You lifters out there that use blocks because, well, I do some serious weight, so I put it on blocks. Well, it's cheating. And, you know, if you watch powerlift competitions, they put it on like 6-inch blocks. But for me, it's from the floor.
This is a barbell.
It's a bar, Olympic bar.
This is a bar, excuse me. I don't know why.
Yeah. Olympic bar. The technique would be you basically sit on your ankles if you're doing it right. Back is straight, locked, and you use your core and your legs to lift the weight. Typically, you should be damaging your shins if you're doing it right, because the bar should stay as close to your body at all times as possible. If you find yourself bending over like an L, you will hurt your back like I did in 2015 on Thanksgiving Day.
And then you just stand?
You stand up, pinch your shoulders together.
Okay.
That's the finish. You should be able to like hold a plate between your shoulders.
How much can you deadlift?
Today or at my strongest?
Right now.
Right now, I'd be surprised 455.
If you head over to Planet Fitness, are they going to kick you out for putting up 455 on a deadlift?
Yeah, they don't even have a spot you could deadlift at
Okay.
Planet Fitness. Especially if you yell, the little siren will go off.
No clunkers?
No, yeah, well, they call them
Lunkers.
lunkers.
Lunks.
Yeah, if you walk in with my water jug and a T-top, they just send you out, dude.
Do you remember the mountain from Game of Thrones?
Yes.
He's an Icelandic man called, and I looked this up because it's important that you pronounce names correctly as well as you can. Abfor Julius Bjornsson. Abfor Julius Bjornsson. Icelandic man. Deadlifted 1,104 pounds. Give us some perspective as to how heavy that is.
Wow, it's 1,004 pounds.
1,104 pounds.
1,104 pounds.
In the weightlifting community, how big of a deal is that? What is that like?
I mean, it's freaking retarded.
Is that like Soros and his trade? Is it that level?
Yeah, I would say, I don't know, man. When I was big into powerlifting, that would be amazing. Top. I don't know. Did you look to see what the world record?
That is the record.
Okay. Crazy amount, right? Just like Soros is going to go down as the world's best currency trader because he made $1 billion in a half hour, breaking the British banks. And if you don't know what I'm talking about, just Google it. It's, just Google who's the world's most successful Forex trader, and Matt's buddy, the Soros is on there. What a lift, right? I mean, the human body is surprising me more and more and more. Look at like X Games. Just in my adult life, let's just say the last 20 years. When I was 20, now I'll be 41 tomorrow. Happy birthday to me.
Nobody said that.
So 21 to 41. What humans have learned to do on motorcycles in that time span, like when I was 21, you rode motocross and you raced. It was like whoever's fastest, and they'd have the finishing tabletop kick out move. Now people are doing triple backflips, no hand, Superman kickies. Yeah,
we went from Jerry McGrath to Travis Pastrana pretty quickly.
crazy. Yeah. And I'm like, I'm watching my 2 5-year-olds on a trampoline. We got them doing backflips already. And I was doing backflip right about the age when I can't jump on a trampoline anymore. Feels like I'm compressing my whole body, and then I just break the springs because I think when you get over like 185. To tie that back to trading, just in the early 2000s when I got started in trading, the amount of technical tools and platforms and the abilities of traders just amazes me, and the access people have. When I got into trading, YouTube was brand new. There was no, I mean, Gary Vee was doing wine library. People were putting claymation bullshit. It was still identifying itself. MT4 was brand new. Some brokers didn't even offer MT4. So there was only maybe 2 options in brokers. It's come a long way. I talked to a 24-year-old the other day. Very smart, obviously done his homework. He's looking at trading like anyone should. You know, he built a pretty decent business plan, but it was all wrapped about how much money he's going to make. And I was like, dude, that's the first mistake we all make. We make our business plan just like you're pitching it to an investor. Our projected sales are going to be 10% a week, and we're going to keep our, not one of his goals was about how much risk he was going to take. It was just like, I'm going to compound, I'm going to make 10% a month for 5 years, and I'm going to retire.
Isn't everyone?
Yeah, and I was like, God, dude, you're not the first one to come up with this plan. Quite honestly, every trader comes up with that same plan. Some even go, I'm going to make 100% a month. I cautioned him, and I'm doing like I'm going to sit down with him the end of May when I anticipate I'm done recording these courses. And, he's all in taking the courses, but I'm going to spend an hour with him on Zoom, and I'm going to break it down for him. I'm going to be like, look, dude, when you start out, maybe your goal shouldn't be about profit at all. Maybe we downplay making money in the early part. Let's put an emphasis on statistically, you'll be a winner if you don't lose money. So let's focus on that. Making money will come if you don't lose money. I promise you. If you don't lose it, you will make it eventually. But let's start out with these goals. I'm going to work on the type of trader I'm going to be. What's one of these indicators am I going to use, and how am I going to use them? How much am I going to risk on each trade? Because we know losing is part of it. Am I going to be a religious stop loss user so I understand my risk the second I push that button? Maybe in the beginning, that's how you should start out. Because I will tell you, if you haven't learned what you're going to do yet when you can't sleep and you didn't close that trade when your system told you to, and now it's tripled in loss in 2 hours, and it happens. If you don't know how you're going to act in that moment, you probably should put that stop loss in, and you should try it out slowly. But if you go into this right away and think you are going to be God's gift to trading, and all of these problems that all of us dinosaurs talk about isn't going to happen to you, it's going to happen to you hard. Trading is not like motocross, where each class is getting, just watching someone do a backflip, they're getting 10 times better. Trading, unfortunately, very low barrier to entry. If you have capital, you're in the game. You didn't have to work out. You didn't have to do anything. That small barrier to entry and its ability to do anything at any moment and change on a dime just wrecks so many people. I'm going to spend some time with this kid. I think he's worth it, and he has a lot of good attributes. But if I could catch him early and be like, let's not look at how much money you're going to make. Let's look at how much money you can lose. Because by the time most of us traders figure it out, and you never really truly figure it out, but by the time you start to get comfortable enough, most of us, right? Luckily, I kind of dodged what I'm about to say, have lost half or 3/4 of their original starting capital. And now they go, I get it. I'm going to get serious. You do need to treat it like a business. And, 1% a week, which I thought was preposterous, way too much, I'm never going to retire on, is actually fucking phenomenal. If you can consistently make 1% a week, we've said this over and over again, for 7 years, you're George Soros. Maybe not making $1 billion in one day, especially if you start with $1,000, but statistically and mathematically, you're in that top tier of traders. Then as you scale up that balance, as you get more and more, you got a whole nother dynamic of stress, right? It's easy to take $1,000 you don't really care about and make 1% a week. And then let's say someone gives you $100 million. Is it going to have the same effect on you? No, it doesn't. So then you have a whole new level of getting used to. And guys, that's why trading changes every time. The markets change. Your risks, your dollar amount changes. The day I quit my job, 190, 200 grand a year salary with bonuses, insurance, health insurance, my laundry done, my suits, 401k, a vehicle allowance. You give all that up. The dream, you give it up. Dude, you work from home, bro. You're living the American dream. You get to be with the kids. You get to wear pajamas. I want to do that. You give all that up, and now it's 100% reliant on your profit from your trading. Guess what? Whole new stress. It never gets easy. It never gets where you can sit back and just take your foot off the pedal. Even with the robot, even with automation, there's stress. Did the robot take the trades in the right place? I have to intervene. I have to get involved. Or maybe I shouldn't get involved because in my back testing results, I didn't get involved and it made it way, all of these things happen to you. A couple other indicators I definitely want to talk about. RSI and Fibonacci retracement. Fibonacci retracement, I don't even consider an indicator. It's so popular, so old. It's more of a measuring stick. I kind of look at it just like the ruler on your trading chart platforms. I use it completely different. Well, I can't say completely different than what is taught out there. The hard part is when you watch someone teaching you about this indicator. It looks so easy. Oh, when you see a massive move in one direction, you just measure the low point to the high point if it's going up. And this handy tool plots very common Fibonacci ratios, which you see all over in universe. The way the leaf grows. The way the coffee comes out of the Keurig machine. In trading, these ratios, they do matter. And it's not magic. It's not this Italian mathematician in the 1600s. Fact checker over there. It's not like he's like Nostradamus and predict. No, he found that these happen in nature a lot. People brought this to trading, and guess what? Here's why it works.
13th century Italian.
13th century Italian.
Born in the late 12th century.
Is that before the Monet or after?
The Monet?
The Monet? Now you're looking at me like I'm not an art guy, okay?
Stick to trading, dude.
Okay. So here's why it works. Because a lot of people use it. Price reacts at certain levels because people are buying or selling there. Let's go back to when I was talking about price action and questions you want to ask yourself before you put a trade on. We all have heard this saying, you buy low and you sell high. It's that easy. People complicate shit. It really, it is that easy. But how do you know what low is and how do you know what high is? This is where people go, well, I got to have an indicator. Not necessarily. Look at what price has done in the past with a certain probability, which you should know based on your back testing and your experience and how you've seen the market. Because honestly, I'm going to tell you, you should back test your strategy on any pair that you're going to trade. Now you got to do that 28 times, 100 times. Then if you want to bring a different dynamic, you go, I'm going to trade this strategy only during the beginning of the London session. So now you do it 28 times. Try to find 100 trades in the first hour of the London session. That's time consuming and data crunching. But if you want to get down to that preciseness, you got to do the work.
Precision, sorry.
Thank you. It's late. It's super late. Fibonacci retracement tool is just another tool in your bag. And I use it mostly when I'm already in a trade. Fibonacci is just like when you're a plumber, okay? And you don't have a pipe wrench that has the grippy teeth on it, Matt.
The grippy, got it.
The grippy one.
Yep.
Or you all you have is a pipe wrench and you really need a spud wrench. And that stupid fucking apprentice grabs the pipe wrench, puts it right on top of that chrome flushometer and digs those teeth in, or channel locks. And you're just like, you son of a bitch, you're using the wrong tool, right? Indicators are tools. Indicators are just another thing in the bag. So if you're using it for the wrong application, you're not going to get the outcome. And guys, what is the outcome? Have you done your homework on the probabilities of these indicators? And just like I proved to myself and whoever takes the journeyman courses today, you can greatly change the results, those probabilities, with experience and with using your eyeballs and understanding price action first. For instance, perfect example, a strategy I teach, strategy I use, strategy I tell most new traders to try out while they're waiting. You know, they need something that gives them a lot of signals, because we're all the same when we start trading. Man, we need a lot of signals, right? I want something that's going to work for the hour and a half I have after I put the kids to bed and my wife lets me trade, which is during the Asian session if you're in America, and it's historically very slow and you're going to be disappointed. However, doesn't mean you don't get these signals. So you take Bollinger Bands, one of my favorite indicators, by the way. Take Bollinger Bands And when the candle, a 5 minute or 15 minute, pick 5 minute, you're going to get a lot of signals. The candle closes above the top line of the Bollinger Band. You wait for the next candle's open, and you sell it if it's above the top line. If it's below the bottom line, you buy it. Now, the rules aren't over, right? Where do I put my take profit? Where's my stop loss? If you're back testing, you got to pick one. So let's just do a 1 to 1.5. So you're going to risk 1%. So your stop loss goes 1%. I use this strategy. I always look for the moving average line in the middle of Bollinger Bands as my take profit. Well, if you do it exactly the way it's written, it's about 52% accurate. But remember, a 52% win percentage. But you remember every time we won, 1.5%. And every time we lost. So you're a winner. But you had to get over all those losses. But then I show same exact strategy. You tie a little bit of price action knowledge and a little bit of managing your trade like you should. People want to just hand over, just going to let fate happen. Well, if you could teach yourself as a trader when you're in a trade that you may have to get involved. You may have to stretch that stop loss a little over 1% because price action is telling you it's not over yet, which is you're breaking the forbidden rule. Don't ever move your stop loss. It's going to just get deeper and fuck you up. Could, yeah. Or you could have went 1.25% negative before that price popped your way. Now, let's talk about take profit. And I showed in this exercise how more often than not, shortening your take profit, because remember originally I want to get back to that moving average. Well, price gets halfway to that moving average, starts to consolidate, and now you start to see some price action signs that it's losing momentum. Take your fucking profit. And when I started doing that with the same strategy, it jumped to a 68% win percentage. Now, my wins weren't perfectly 1.5%, and my losses weren't exactly 1%. But I would tell you, my win percentage skyrocketed and my profit skyrocketed by adding what most would say you can't do in a back test, because you're sprinkling in emotions. You're sprinkling in human your intuition, which for God knows whatever reason, everyone out there is trying to make you remove. But damn it, it's the only thing that's made me successful in trading is understanding this is a business. Just like when I was a plumber, the book teaches you one way. There's the code book. And then the specs will supersede the code. So if there's conflict, if the contract documents or the specs of the project you're on are more stringent than the code, you don't get to use that excuse. Well, the code book says I could put a Denver cross here. Well, the specs say no. You can't. They supersede it. Well, in trading, the strategy you learned is the code book. Okay? It gives you the rules. It tells you, hey, I've used this. Here's when I test it this way, the probabilities and the win percentage. And now you take that strategy. You got to make it your own. The only way you're going to feel comfortable doing that strategy is do it over and over again, hopefully on a demo account. And the best way is backtest it. Log your results. Optimize some of those things the way you see it. going through that hour and a half long video today, because I started out, I'm going to teach people the exact same way. We're going to eliminate any human interaction because it's the only way to get a real control. But doing it for an hour and a half, I was just like, this is stupid. I wouldn't take this sell trade, even though my strategy is telling me, because the price action, the emotion of the chart is telling me I'm just going to donate my money if I put a sell trade on here. And that's what's happening to these new traders who are learning strategies without learning price action first, without learning how you just look at a chart with nothing on it but candles. You probably should even practice how to do it with a line chart without candles.
We had a really good AMA training for the journeyman members.
What's an AMA?
Ask me anything.
Okay.
Ask Clayton anything. Training.
ACA.
With, what was it, Naked Trading on Thursday?
Naked Trading may be copywritten.
Okay.
Because some dude wrote a book
All right.
on naked trading. I don't know who he is, but hopefully he hasn't like copywritten the word naked and trading together.
We got a lot of positive feedback today about that.
Yeah, I think it went really good. It was impromptu. Is that right, Matt? It was
No, impromptu,
which is always the best. You know, because we're starting to create a pretty good family in there. I want to make my Telegram signal service, which is just all over, right? Everyone's different in that fashion where, you know, if you're in that service, you're going to get lots of trade ideas that I either take or don't take. And then you're going to get to see when I take them. You're going to see the mistakes I make along with the wins. I share those mistakes. I'm not shy to say, fuck, I missed my opportunity to close that. Now here's why I'm fighting out the drawdown. And you may not get a lot of signals every week. This is where got people that come to me thinking about it. You know, they're coming from some other signal service and like, well, how many pips are you going to guarantee me and how many signals a day?
We get that question.
And I'm like,
every day.
I go, well, look, our goal is to try to make 1%. That might be in one trade. And it doesn't mean I'm not going to look and post ideas and maybe take more trades. However, I'm going to get really selective because the whole purpose of this channel is how do you trade a small account, something that most Americans can push out.
What's the value of that account?
I think it was $4,800. Okay. If you can't find $4,800 of risk capital, you probably should demo trade, learn the skill, get motivated enough where you can go drive Uber or Lyft, or what's the one we talked
Instacart,
DoorDash. Do something for extra income. I even think, dude, when these courses are done, we built enough rapport. I think it'd be really good content if I'll go DoorDash. You could film me. I'll trade while I'm DoorDashing, and I'll add what I make each week to that small account, and we'll make a year-long YouTube video. Be like, here's my experience, why I'm trading. I could trade Forex on my phone because I did the analysis on my trading view charts before I got in my car. Very key point, guys. Do not get in the bad habit of trading from your phone charts without looking at decent charts. Disclaimer there. But I thought it'd be really cool to go, look, I'm going to DoorDash because I can, right? I don't need the money. But it'd be fun to put myself in the shoes of someone who, you know, what I hear all the time. I want to trade, man. I just don't have the money or the time. I'll be like, well, I'll run my channel. I'll trade while I DoorDash 3 hours a day or something. And if I make $500 that week, I'll add it to my trading account. and we'll just track that. It'd be a really cool YouTube channel. Yeah, $4,800. I haven't traded that small of account in a while, so it's been a learning curve. We had a losing week last week. We gained it back this week, but everything I gained back, I got 2 or 3 mental errors, not closing a bad trade when price action told me, ended the week in, defensive drawdown. We're in a defensive drawdown moment. So I didn't get a lot of signals out at the end of the week.
If you want to track Clayton passively, just go and sign up for the newsletter on allenfx.com. And you can even schedule your 30-minute call. It's not a pitch, it's a conversation. In the newsletter, we post your results every week.
And in the channel.
And
my MyFX book link.
And in the Apprentice channel. The Apprentice channel is free. That's ideas and lore.
Well, I do 2 or 3 trades of the week, which, guys, the last 2 weeks, they have turned out very well. The hard part is I don't have the time to manage those trades in that channel. So I put the theory down and, I review those. I do a special video in that free channel each week on Saturday where we review those trades of the week, which usually are pending orders. You have plenty of time to put them in, and they're swing type trades. So my goal is if price gets here, you're going to sell it or buy it. And then you had plenty of time to prepare for it. So if you're a busy individual or if you're slow or new to trading, the markets move really fast to people. It's just like what they say about the NFL. Kids come up from college and they're like, it's like 10 times faster. But someone who's played NFL 5 years, like, oh, I'm there. You put the trade on, you put the stop loss, put the take profit. The shitty part is I'm not able to manage that trade with them. Might be something I start trying to do when I'm done recording all these videos and these courses.
And moving
and getting separated and splitting time with my kids.
Me pestering you less.
And being in lockdown and putting a roof on.
American household debt now is $14.3 trillion, which is 64% of our GDP. Think about that.
Let's think about what debt is or credit. Credit is capital created out of thin air. I can't remember what show it was where we talked about Ray Dalio and his 30-minute YouTube or whatever about economics.
How the economy works.
Right. The mechanics of economics or whatever. Great explanation of it, right? Credit is someone else's income because you spent it that was created out of thin air that becomes someone's debt. So you essentially borrowed from your future self. So it's great to boost economies. It's great because to earn that capital, and we all know this, to earn it takes too long. And we don't have time. We don't have time to earn $250,000 before you buy the house. Right? So you borrow it. Some people use credit irresponsibly. And most people. Right? And then because the majority use it irresponsibly, then everyone feels victimized and they feel like they should relieve our debt. Well, the hard part is, guys, once you've created credit and now you have a debt, if you relieve people of that, the whole credit foundation falls and there's no more trust. Banks, the lending, everything that our American economy is based on falls apart. Now, printing money, quantitative easing. It's different because there's no debt. It's inflation. It's devaluing the dollar. And these games that we're playing today, like the liberals or the Democrats wanting to push policies like we're going to pay every American $2,000 a month plus their unemployment benefits.
Universal basic income.
So I was doing the math. a family of 4 under some of these preposterous ideas the AOCs of the world are wanting to push out because they want votes right now. They want
a bartender who's never built a business.
So let's say you have 2 adults, 2 kids.
Love our bartenders, by the way.
Right? Well, and barbers and hardworking people.
We've gone over that.
You know, I did the math with some of these policies. That family's making $225,000 a year without working. And I'm like, what kind of inflation would that cause? Now, people aren't working, making $250,000 a year, and that much money's getting pumped into, printed and pumped. Sorry, it would cost you $1 million for milk.
And interest rates.
Interest rate
are going to go to 25, 35, 40% because can't be trusted.
Right. It'd be like,
can't be trusted not to default.
It's
punishing the savers as well.
I just don't. And then what about the essential workers that still have to work? And they're like, wait a minute. This asshole is getting $200,000 a year while I'm essential and I have to drive the truck for that wage, the old day wage.
All workers are essential or they wouldn't be employed.
Well, it's just crazy what we've done. I mean, I get it.
How long will it take us to get out of the unemployment that we just
So today was non-farm payroll. Another 22 million people lost their jobs in April. I'm a statistics guy. These economic hardships have happened. Now I'm going to tell you in 2008, let me ask you, Matt, and my numbers aren't exact because I didn't write them down, but what do you think the unemployment rate got at its peak with the largest financial crash we have ever seen?
10%.
Just total number-wise. Like 18 million, 40 million. At its peak,
I don't know.
19 million.
I was going to say 18 million. Damn it.
Damn it. 22 million just in April.
Yep.
So here's where we're at right now. If we look at history, as we should, because we're traders, it's just like looking at, when did price ever get this high? Oh, 100 times before. It's not that rare. If you look at the recovery, if we look at the fastest America has ever recovered from 19 million jobs lost, 2008, and that was the fastest recovery. With today's numbers, it's going to take us 12 years to recover back to where we were.
There's no help coming.
Now, I want to believe that most of these jobs that are lost, they still have a job. It's just we've made it really easy for someone to accept and for an employer to go. Just look at the hospitality industry. There's really no question when the business is going to come back because we did a shitty fucking poor job in the beginning of this. And, I'm not blaming Trump. I'm not giving him a gold star either. However, when we decide to shut down America's economy for this risky virus, whether we had the information or not, whether you believe it was a hoax or not, if that's the right thing we have to do medically, fine. However, it should have been, what do we know right now? What are the risks? Okay, it takes 14 to 20 days for someone to show signs of this. So you go, okay, I'm shutting every fucking thing down 20 days. You're going to stay in your house. We know your rights are going to be infringed on. We know it's going to suck, but it's 20 days, come hell or high water. If you're showing signs in that 20 days, your whole family gets quarantined longer. And then right around 14 to 20 days, we're going to have our shit together and we're going to test everyone and you go back to work. And then you tell all of these employers, it's a 20-day vacation. And you tell all these creditors or people that owe debt to, and you say, look, you have 20 days to figure out how to not accept 1 month's payment and add it to the next 12 months. Figure it out. That's your challenge. I'm going on TV tomorrow. These are what we're fucking doing. Something like that. You'd never lose these jobs. But if you let these governors, and I know it's the way our system works.
We are a republic.
Right? But a little bit more direction, a little bit more planning. And, the governors may have been swayed. 20 days. I can live with that, right? Schools, 20 days. Restaurants, take a 20-day vacation. They might have went, fuck, I wanted to go to Mexico for 10 days, take a break. But I'm not going to let all my employees go. But I'm hoping we shifted into, let's triple the amount someone on unemployment gets right now. Let's give them a stimulus check. Let's help. We're helping you. No, you know what fucking helps us? Get us back to work. Have a plan. How does this relate to trading? How do we not make the mistakes that I feel our leaders made in this COVID-19? Don't start your trading plan with how much money you're going to make. Just like this shutdown was. We could lose all these lives. And at whatever cost, it's to save lives. And I get it. I know that might hurt some people's feelings, and saving lives is important. But how it relates to trading, if the only thing you're looking at is, I'm going to make 10% this week, you're going to miss a lot of details, and you might find out you might lose 50% that month. When it becomes obvious, it's too late. Like, I hope some Americans are waking up. Saving lives is good, but we should have thought about, how are we going to get back to work? Before you shut down, how are we going to reopen? It doesn't feel like that question was asked. Doesn't feel like we even have a plan now. And now we're letting small business owners and everyone like myself flounder and make our own opinions. Just go on Facebook, people, and look at all these. Everyone has their own opinions. There's no one leading the ship here. There's no one having a plan. And I will tell you guys, if you want to get into trading, if you just got into trading, you got to have that plan. And I'd love to be the person to help you create that plan. If anything, this disaster crisis has taught me, having other forms of revenue, having other forms of skills, when life pivots and economics pivot. How many waitresses out there didn't think they'd need another skill? Waitressing is one of those things you fall back on when your paralegal job goes under. Now it's like, holy crap, paralegals are working from home. Waitresses are paralyzed. They can't do anything. So guys, don't ever think the norm's the norm. I'm getting floods and floods of people calling me because they want to learn how to trade, because trading is something you can do. Take a little bit of risk capital, and you can, if you do it right, it can be another form of revenue, a wealth building, something that you can take the earnings you're making from and reinvest it in something else and diversify those incomes. Don't ever rely on one income. Don't ever rely on one skill, and keep an open mind out there, because you might just be a dyslexic plumber who trades for a living one day, like I am.
Well, thanks for hanging out with me tonight, dude. I
love it.
I'd like to say it was good to see you, but, look at you.
I got you drinking White Claw.
Thank you very much for listening. Please join us next week.
Over and out.
If you're interested in copying Clayton's trades, visit allenfx.com and find us on Facebook. To write to the show, hit us up at DTP@allenfx.com. You can find me on Twitter @OFPMatt.